What is up, fuckers? Welcome back to another video. Today's gonna be a little more serious video. It's gonna definitely be more analysis. So if you guys aren't into that stuff, please click away, click off the video. Don't watch the video if you're not here to take notes or analysis. Let's get started. First things first, if you are gonna take notes, please note that I yap a lot, if that makes sense. I'm not like ICT or those big guys. They'll talk just for notes and just for you to write down. I'll maybe point out some key stuff, but overall, we're going to just stick to what I did today, what I noticed, what the analytics were, and what I did, what I was thinking, you know? So let's hop on SPX 5 minute. Let's first take a look at the daily on SPX real quick. Let's take this off and let's go here and take a look with no indications, no indicators, no lines, and no nothing. What can you notice with your your eyes, right? Your eyes. What can you notice here, right? This simple chart. We have this daily move up. We have obviously two fair value gaps created, one here and then one here. As you notice right here, boom, we create this. Oh, I already have it. I already have this fair value gap. Boom. Kind of move up, market structure shift, hits this consequent encroachment, buy side liquidity, comes right back down, right? Hits this, I guess you want to say fair value gap, but I feel like it hit a order block in this in this little range right here. After it hit the order block, it came up to its bearish displacement after we had a market structure shift again. Displacement, fair value gap created, and we then had price run up to these highs to this fair value gap. And then we had Monday was the high that, you know, broke through consequent encroachment. And then Tuesday was the candle that fucking fucked us basically right back down to our level that we were trading back. Let's hop on to the 1 hour. There's gonna be a lot to look at. There's a lot of lines. I'll explain them. Okay. This dashed line, okay, is basically the bottom. It's a fair value gap. I'll make it like this. This blue thing here is just, this is the fair value gap. Bottom of the fair value gap, top, consequent encroachment. Okay, that's how I like to do my fair value gaps. As you can see on Monday, we rallied up. Okay, as you can see on the 1 hour, we traded above. We had one nice, maybe two doji candles. We did sweep this buy side liquidity. There was order blocks up here to take out. We took everything out, kind of traded down. And then Tuesday comes around, okay? And then you have to note, let's just do this real quick. Tuesday 12, okay, so we started here. This is okay, this is our whole trading day. Let's move down to maybe the 30 minute. Would that help? Yeah, that helps. So we open, okay, our daily open is this candle, and then you have Tuesday's highs. I marked this as Tuesday's high because we are Tuesday and this is our high at the moment, right? And you could consider this Tuesday's high, but the thing is, this is 1 p.m. and nothing is going to trade after 4. So the thing is, price is not going to come back up here. These are the new highs, but the thing is, you have to pay attention to the pre-market highs. These are the pre-market Tuesday highs. My bad, I should have marked that. Pre-market highs, okay? Price in pre-market does its thing, comes up to this fair value gap, the top of it. Remember, this is the top of it, trading above, and now it's under. Top of it, I would say it tested it, right? It's around this price level range. It's maybe like it's 0.1 cents off, right? Tests it, gets completely rejected. Now, excuse me. I talk a lot, so my mouth gets dried. After this rejection, not only do we create buy side liquidity up here, but we also create pre-market Tuesday highs, which I have marked out. We get rejected. We create, what is this called? What is this big candle called? It's called displacement. This is called displacement. In this displacement, we create a fair value gap, which you could actually like basically mark out from this to here with this 30-minute. You can make it a little more refined, right? If that was your entry. The thing is, as you can see, we just plowed through it. We didn't have an entry on this. What we did have an entry on, is this the 1 hour or am I tripping? Not even. What? Trying to find what time frame I used for this. Was it the 15? It looks like it's been, yeah. I guess it was the 15-minute chart that I used this fair value gap for. So a 15-minute fair value gap gets created by displacement. And then this is where I noticed lots of choppiness, right? So we chop up and down. We are, again, I want you to notice this very key level. We are this bottom of this fair value gap with this displacement. We are not trading inside of it. Pre-market, right? Pre-market, we are not trading inside of this fair value gap. We are rejecting every time it comes close. We've had not only 1, 2, 3, 4, we've had 5 times where price could have traded into it, broken through it, disrespected it, rejected it, whatever. All we did was reject it, reject it, reject it, and reject it. So, my bad. Pre-market, yes, we get rejected, get a nice move up, down, whatever. We do create sell side liquidity down here. Pre-market takes that, right? You can notice the liquidity. I like to test things out pre-market, right? Okay, is there liquidity? Is there buy side? Is there highs? Is there lows? We create some sell side liquidity down here pre-market. That gets taken out pre-market. You can see a nice little move up. This moves up, takes us to our what's called order block. Up here, you also have relative highs and you have buy side. It also takes us to this nice little fair value gap, which we reject. And we go lower. And where do we go even lower, right? We go down to this order block. And where was this order block created? I believe this is if I'm not wrong, this is a 30-minute order block. The price comes onto this order block. I want you to notice that this candle is now 9 a.m. So that means that this is 9:15. And so after this order block, we are looking 9:30 open. I want you to note on the 5-minute, if we change here, let me zoom in a little more. 5-minute, we get nice displacement. This is a huge candle for us. Huge, huge, huge. Nice displacement. Where did I mark this? Was it though? Or was it a 3-minute? It was a 3-minute. Okay, so 3-minute 3-minute displacement here. And actually this probably should be here because this is actually where I entered. Not over there. I don't want to confuse you guys. Displacement, I marked this fair value gap in blue from the top of this wick to the bottom of that wick. You might say it's not super important, but in these situations it is, because price shoots up at 9:30, right? Market opens, shoots up, and you're like, see, all these people, if you're new to trading, you're like, oh my God, market opens, it's going up, it's going up, it's going up, it's going up. I'm going to buy calls. So guess what they do? They buy calls here, hoping that, oh my God, it's gonna go all the way up here. Oh my God, oh my God. Their stop loss is where? Where's their stop loss? Maybe halfway through the fair value gap, maybe like down on this low, whatever, maybe something like that, right? So at first it works out, right? But guess what you see, right? What do you see here? The first thing I see is this big down move. So where does this come from? This is liquidity, right? So any smart trader that watches ICT would know, oh, this is unswept liquidity. So what do we do now? Mark out buy side. That's buy side liquidity. Now what happens? So that got stopped out, whatever. Now what happens? It sweeps it, but it doesn't come down to this low. It doesn't come all the way down here. No. Because there's confluence and it's market just open. Confluence comes down, hits this fair value gap that we had on the 3-minute displacement, perfectly into it, taps into it, comes all the way back up. This is 951, right? Almost 10. Comes all the way up to this order block. You could even mark this over here. This is also an order block here. I'm thinking there's also like a 1 minute order block like in this area right here, in this black area that I marked. That's also an order block that it can hit and reject, if you will. And this is where I hopped on the chart like way before, but I was watching it and I noticed, well, okay, I had my bias. I was like, we are bearish for the day, right? We have filled this fair value gap. We are going down. At what extent, when do we go down, and at what extent do we go down? So when do we go down is the first question. Obviously, when market opens, this is when the sellers and the buyers are now in the market. So now the volume is increased, the volatility has increased. So that means that any big move that needs to happen or wants to happen will happen, if that makes sense. Any big move or major moves that want to happen will happen. So if we wanted to go up, we could definitely take this trade and, you know, go up and fucking hit the moon, right? I have now hit a better understanding that if we did want to go up and you took a trade, you could have a tight stop loss. And if it ever went above your bias or your highs or your stop loss or whatever, you'd have such a tight stop loss that your risk to reward is so low that you'd barely be losing any money, if that makes sense. Because your bias is so right, your confluence is right, your trading is right, that means that your stop loss should basically be break even, if that makes sense. Almost. Don't make it break even, but notice how my stop loss was basically at these old highs. If price went up and broke this order block or broke this you know, was fully bullish here, I would be looking to where it would you know, maybe this fair value gap is my stop loss, right? Maybe that should have been it, my fair value gap, right? If it went above this fair value gap, I know damn well I'm out of the trade. I don't even want to trade anymore because my bias is wrong. My bias would have been, hey, I wanted to reject this before it even gets to it, which it did. So when I took my trade, that's the question, right? I saw on the one, whoa, why is it zooming out so much? 1 minute is where you can really see. I know people don't trade off the 1 minute. I really don't do this, but for entries like this where it needs to be precise, I look for breaker structure, right? We had this breaker structure right here, boom, right here. So actually, my entry's up here. I just kind of guessed it for the video because I deleted it for a picture. That was the trade, right? So back to 3 minute. That was the entry. That was the trade. Boom. That was our entry, breaker structure off the 1 minute, and then you can see we have this you have this candle, then you have the followation, right? And this second candle, I don't know if you guys can see this, the wick of it scared me. At first I was like, holy shit, like I'm wrong, this is not going to work out very well, like fuck, I'm doomed, right? You just have to wait it. Because if your stop loss is here, your bias is in mind, right? You're in the trade, you saw this candle, you're like, fuck, it's coming back, it's getting bought up already, I'm fucked. Dude, just get out the trade. Like, you don't have to wait for your stop loss. If you think that this trade will hit stop loss, get out of your trade, right? I didn't get out of my trade. This barely hit break even for a second. When I tell you this candle went up and it went down, it went up and it went down. So I went down, doji went down again, and it hits this previous fair value gap that we have marked out. And this is where I'm like, holy fuck, price is probably going to come all the way back up. But it didn't, and I'll tell you why. Actually, I can't really tell you why. I don't really know why. It just went up. I'm guessing there's a 1 minute like fair value gap in this displacement candle, right? Hits this, probably, I wouldn't say it's an order block because the order blocks are up here. Probably a fair value gap, very small, rejects that. To me, at this point, right, I want you to understand, I'm in the trade, I'm seeing this fair value gap, I'm seeing this order block get taken. I'm like, okay, this is good validation. I know that this will now break through this fair value gap, right? Because we have taken this out and we have traded through it, it will not reject again. And if it does, it will, and then come through it. So it was either one big move or one little move and then one another move, right? So I'm like, okay, at this point, what do I target? What's my target? What do I want to be targeting for as my take profit? So at first I had this order block marked out here, and this was the 1 hour order block that I talked about. Then I noticed we had, obviously we had our sell side liquidity that we had created at 9:21. So this is when market opened, right? Mark this out, obviously. Whoops. You have, let me just mark this whole zone because this is pretty important. You have your sell side down here, right? Do I have liquidity? We'll just say liquidity. It's a liquidity void, if you will. You have liquidity, sell side down here that I'm targeting, right? So at first, this was my original trade. I was targeting this. And then I moved my break even down to this fair value gap. Price, you know, obviously hit my liquidity, hit my take profit. And I believe I had like 3 contracts. So I always take 1 contract partials, you know, midway through. Second is my full take profit. And then third is a runner if I'm confident in the position. Now, this is, I swear to God, I can tell you, I remember this moment. I was like about to exit my runner when I saw this candle. On the 3-minute, boom, it hits all the way down here. I'm like, what is it hitting? Because remember, I was stupid. I had this breaker block like all the way over here. I don't know why. Over here, and I was like trading here. I'm like, what the fuck is it? Like, it hits this. What is it reacting to? Like, what the fuck is it bouncing off to? You know, like at this point, I'm like, what the fuck is it reacting to? And I zoom out to the 15. I'm like, oh my God, there's a breaker block. And look, when you line this shit up, this is our second target. I'm like, holy fuck, it's targeting this breaker block. A breaker block is a order block that has been traded through, broken through, and then came back to be tested again. If we look on the 1 hour, I can show you this perfectly. On Monday, this breaker block comes back to be tested. Boom, price up. Now my thing is like, holy fuck, if this hits a breaker block, that means that we're not going to trade under it. And to trade under it and to fully trade under it like we are doing here, right? This price action here, then we need to go higher because guys, we can't go lower until we go higher, right? Vice versa. You can't go lower until you go higher. So you can't go lower until you go higher. So when I saw this, I'm like, oh shit, it hit a breaker block. But now the thing is like, fuck, like price is going to come up. What is it going to target, bro? Like, because it already hit this breaker block. Now, the thing is, it actually reversed under here. I bet there was some kind of liquidity or order block that didn't mark out. I was completely out of this trade at this point, so I didn't really worry about the whole move up here. You could have definitely traded this. There was definitely a way to trade it. I just didn't trade it. I didn't pay attention to it. I'm out. You know what I mean? I could have definitely done my last analysis, but that would have been way too many lines. There's too many fair value gaps, too many shit on the other side conflicting with this. So what I like to do now is just set this, and I leave my runner. I'm like, okay, well, if it's going to do this breaker block, it wants to do the whole breaker block. It doesn't want to just take the consequent encroachment of the breaker block and just trade all the way back and then all the way through. What price needs to do is, like this price did, trade right under it, sweep it, and then come all the way up, which is what it did. So I left my runner. My last position was under this breaker block. As you can see, TP3 got hit, runner got hit. Pretty good analysis, I would say. And the last thing I want to show you is QQQ. I don't know why it's doing that. QQQ, huge validation. This is much simplified. I look at QQQ, obviously it's futures. It's from the NASDAQ, which we'll look at NQ in a minute. If you guys are still here, good. You guys will learn a lot. As you can see, Tuesday, right? We pre-market, we reject again this order block. Boom, come down, pre-market, this and that. We create buy-side liquidity. And if you look on the 1 hour, this is pretty obvious what's going on. Buy-side liquidity, we sweep it pre-market. 9:30:10 or 9:30:10, right? Boom, buy-side gets swept. Guess what happens? We go right through this fair value gap that has been traded through already, disrespected already, go right through it. Where do we target? We target this order block and we target sell side, and we have this secondary order block with the sell side. That's our 2 targets. So if you were to take a trade, boom, I don't know where you'd enter, right? Let's just say, like, I don't know, you enter like here, for example. You targeted sell side. Stop loss was tight above these highs. You had a 9, bro. What does that say? A 0.3 to 9 risk to reward ratio. What? How tight is that? Like, can it get even better than that on QQQ? Like, if you took this trade, like, incredible. Or actually, no, it should be more like this because it's on the breaker structure. That seems more accurate. There we go. That seems very more accurate. Still, a 0.51 to 4, or basically 5 to 0.5 risk reward. What more can you ask from this? You know what I mean? And I want you to note something. Look at SPX. Look at this big move up. You see this? Look on QQQ. We didn't get all the way. We didn't get to these highs, right? SPX went all the way to the Tuesday's highs. Retested this, this daily fair value gap to fully come down and trade under it. QQQ didn't do that, right? So QQQ, the only way to trade it would have been this bearish move, which I did on SPX. You know, it is what it is. You trade what you can, right? Price wanted target. Also, yeah, this fair value gap on QQQ. NQ, not too much happening. Basically, same thing. Fair value gap, rejects the fair value gap, comes through it, trades through it, targets, order block, sell side, boom, done. ES, absolutely the same thing, right? It's the same thing. Let's take a note at the look. What the fuck? Let's take a look at the notes. This was today. This is the ICT module that he showed on his stream today. And I wanted to do a quick comparison because this is his chart and this is my chart. And there's not a lot you can see, but I can see a lot of comparison that I was correct. Now mine's a little more zoomed out, so it's gonna be a little hard. But you have this 15-minute fair value gap. He has a 5-minute premium fair gap, but I can tell you right now, this whole chart is in the 15-minute. So you have this fair value gap. Guess what? I have that too. Mark that out from him, right? I learned that from him. Then what does he have? He just has sell side liquidity down here. What do I have? Sell side liquidity down here, but I also have more sell side down here that I added later, right? To be targeted down here with this order block. As you can see, where do we target? Sell side up here, or liquidity. I didn't mark it, I just marked it as a box. He had some more liquidity. Okay, so here's the thing I like with ICT. He was trading the NASDAQ. So he was trading NQ. So he probably had, yeah, I can already tell. He had like liquidity levels down here. He had liquidity levels down here, and he probably had liquidity levels. He probably had like an order block or something, like, I don't know, like support here, like liquidity. There's a bunch of levels that he had on NQ, right, that match this right here. I was on SPX. So SPX and NQ are very different. But the price action is I wouldn't say it's almost the same, but it relates a lot. So our levels were correct, our fair value gaps were correct, or matching, if you will. Sell side liquidity was correct, targets was correct, and the trade itself was correct. This is why I screamed into the mic when I first started recording, because I was hyped. This is exactly what I wanted to learn. I took so long out of my year to learn all of this ICT stuff, and I can finally show that it's working out, right? I only saw this video after it was posted, after my trade, right? Like a long time after. Like he posted it like an hour ago, right? This was not before. I didn't have this chart up. This is all me. This is all my chart, right? I could definitely, and I can 100% clean this up to make it more understandable to you guys, more understandable to myself, to clean it up. But again, in my learning days, the more analysis I have, the better, right? But then there's per analysis. There's too much analysis, if that makes sense. Yeah, but that's the trade we took. If you even look, I did take notes on today's prediction. Look at this, right? So this was in the morning. I don't know when in the morning. I had I had predictions, right? I was like, okay, this is the prediction we're gonna have. I at first I had this this trade, but I was like, this isn't gonna work because of this OT wasn't respected at all at first, and then it just swept sell side liquidity off this displacement, and I was like, okay, maybe this bullish fair value gap will act as an inverse fair value gap, which I was wrong. It didn't. But I still had the bias in mind. I said looking to go bearish, right? Price displacement under a fair value gap and rejected is no price action inside. Then price hit a I fair value gap during pre-market. Whoops, nicely respects it. Then comes back up to reject the previous London open fair value gap, which is up here. Price comes down to sweep buy side and come up to disrespect fair value gap to come back down to targeting OB. So at first, I had this, then I moved it up here, and that's when I took my first trade. And then you had this was the price action, right? So my trade was like down here, and we got completely fucked, and it went all the way up here. Market open, swept, right? And then I said price reached for the fair value gap, which is the higher one, right? The daily one. Price disrespected the I fair value gap and went straight to take out sell side, but had, or buy side, my bad. Let's do this. Buy side liquidity, but had to take out sell side. I mess them up all the time. And fair value gap before moving down to take out sell side in order block. So that was that little trade. Boom, bam. I mean, come on. Come on. You know what I mean? Like, yeah, this was the pre-market trade that I took as a analysis and as a not as a joke, but I just wanted to test out the bias. I was correct on that one. Swept. Wanted to do it again. Did it again, baby. We hit W's every day. Actually, no, we don't hit W's every day. We hit woman every day. No, I'm joking. You guys have a good day. I'll see you guys tomorrow. After tomorrow. Actually, no, I won't see you tomorrow because tomorrow is CPI. And if you guys know, I don't trade CPI. I don't trade news at all. So I'll see you guys next week, basically. All right. Peace. And I appreciate if you stayed until this very last second of the video, you're gonna make it. You're gonna make it. You're gonna be profitable. You're gonna be smart. Okay. Good night.